Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the corporate world, and today we're looking at Applied Digital Corporation's latest filings, and let me tell you, they're making some big moves to boost their operations. We're talking about a company that's actively seeking more cash to keep its ambitious projects on track, specifically at their Polaris Forge I data center in North Dakota. This filing is all about them securing that funding. So what's happening here is Applied Digital Corporation is updating its agreements to get more money. They've got this thing called a preferred equity purchase agreement, which is basically a fancy way of saying they're selling stakes in the company to investors in exchange for cash. This agreement was originally signed back in April, and now they're amending it. The main change is they're doubling the amount of money they can get from these special shares, called Series G convertible preferred stock. It's going from $150 million to a whopping $300 million. They're also removing a limit that was in place for how much they could get at any one time, through something called a put issuance. Think of it as a safety valve for investors, and by removing it, Applied Digital is saying they're confident they can handle a larger inflow of cash. Now, this next part is interesting because it touches on how these preferred shares can be converted into regular common stock. They've significantly adjusted what's called the floor price. This is basically the minimum price at which their preferred stock can be converted into common stock. They've bumped it up from 40 to 40. This is important because it suggests the company feels its common stock is now worth more, or they're setting a higher threshold for conversion, potentially making those preferred shares less likely to convert immediately if the common stock price stays low. They also adjusted the limit on how low this floor price can go, raising it from $1.34 to $4.53. This is important because it suggests the company feels its common stock is now worth more, or they're setting a higher threshold for conversion, potentially making those preferred shares less likely to convert immediately if the common stock price stays low. They also adjusted the limit on how low this floor price can go, raising it from $1.34 to $4.33. It's worth noting how they're selling these shares. They're doing it under a specific exemption from having to register the shares with the government. This usually means they're selling to a select group of investors, not the general public. Often those considered sophisticated investors who can handle the risks without the same level of government protection. For a bit of context, Applied Digital's common stock trades on the Nasdaq under the ticker APLD. They're aiming to fuel the build out of their data center in North Dakota, which is a pretty capital intensive business. Looking at the exhibits they filed, we see the specific amendment to their certificate of designations for the Series G preferred stock and the form of the First Amendment to their preferred equity purchase agreement. These are the legal documents detailing these significant changes. And finally, the report is signed off by their Chief Financial Officer, Sadal Mamand, on August 15th, indicating the official filing date. Now let's think about what this all means. Applied Digital is clearly in a growth phase and they need capital to fund it. By doubling their preferred equity commitment and adjusting the conversion terms, they're showing a strong commitment to their expansion plans, especially that Polaris Forge data center. Raising the floor price is an interesting move. On one hand, it shows the company probably believes its underlying value is increasing, justifying a higher conversion price. On the other hand, it might be a strategic move to delay dilution of existing shareholders if the stock price doesn't climb significantly. However, the sheer increase in commitment from $15 million to $300 million tells us they have substantial construction costs and growth expectations for this data center. It's a bold move that signals confidence, but also a significant need for cash. The risk here, as always with highly leveraged growth companies, is execution. Can they deploy this capital effectively and generate returns that outpace the cost of this financing? They're essentially banking on the success of their North Dakota facility to drive future revenue and profitability. If the data center project, alright, that's our breakdown of Applied Digital's latest filing. What's your take on these aggressive capital raising moves and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.